Hello and welcome to another Smaulgld live stream. Today is Tuesday, August 7th, 2018. And tonight's topic is rising real estate prices. Who benefits? I'm going to take a break from the crypto and gold and silver topics tonight and talk about real estate. But before we do that, let's take a look at the gold silver prices. Pretty flat day for both, although gold did manage to creep up a bit midday from about 12.09 to 12.15, but fell back to about 12.08. Story was the same for silver pretty much. Opened up around 15.29, climbed all the way up to about 15.45, and then fell back down to 15.29 or 15.36. Cryptos, similar story, although they took a bit of a beating in the last few hours when the SEC again delayed an approval of another ETF, this one the VanEck Bitcoin ETF, but it is just a matter of time until they approve one. I'm not sure why they think this is such a big deal. However, when the SEC does approve a Bitcoin ETF, I think they will do it after they approve of a U.S. trading exchange to get one registered like Coinbase as an alternative trading exchange. And this way they'll feel comfortable they can monitor at least the price action, the activity on that exchange. And they'll probably even throw in Poloniex for good measure at some point. At that point, then I think you're going to get a lot of ETFs. You can get a lot of Bitcoin locked up in those ETFs as well. But as of now, Bitcoin, which had risen into the 7,000s, is now at 66.98. Bitcoin Cash fell below 700 to 654. Ethereum 376 fell below 400, and Litecoin fell all the way down to 66.77 at the moment. Speaking of Bitcoin, Bitcoin Cash, and Ethereum, Chairman of the House Judiciary Committee revealed that he's got all three. According to his filings that they now have to make as members of Congress, they have to do these financial disclosures. And apparently he's got himself quite a bit, like between, they say, $17,000 and $80,000 worth of those three cryptocurrencies, Bitcoin, Bitcoin Cash, and Ethereum. And his son apparently is an investor in Coinbase. Again, this ties into my belief they're not looking to cut any. They're not going to arrest everyone. They're not going to arrest members of Congress. They're going to regulate it. They're going to try to co-opt it. There's too much money involved. I think that should be clear by now. Anyone who's telling you that they're going to shut it down and that's just not where it's headed. Now, I am willing to follow this and see if it does change, but it's gotten more and more clear to me that they're already past the point of no return on that. They're going to go after bad actors for sure. Money launderers, tax evaders, people using Bitcoin for illicit activities. But they're not going for a full wide-scale ban on Bitcoin. They already got Bitcoin futures. If Bitcoin was a Ponzi scheme, they wouldn't allow the CFTC and others, in their minds, to sanction a Ponzi scheme future. They don't view it as a Ponzi scheme. They view it as something they want to regulate. All right. Any other news? Yes. One other big piece of news. And this one's kind of ridiculous. This is our friend Elon Musk. Now, I don't know why this stock trade. This is an investment advice. I marvel at the fact that this stock has the valuation that it has. It's worth like $65 billion. It's worth as much as any car company out there. Cars, they appear to have a lot of problems. You hear of at least a half a dozen or so of them bursting into flames or just driving off on their own. But it's not just that. They don't make that many cars. And then Elon Musk has been very, very erratic in trying to answer questions about profitability or safety. He's not very investor friendly. And then he's running SpaceX. He's running Solar City. And he's got all these subsidies. It's just very odd. But anyway, today he just tweets out he's considering taking Tesla private at $420, which is a significant increase to the price that it is now. And he says funding is secured. Then he says he hopes all current investors remain with Tesla even if we're private. Now, I don't understand why anyone would take the company private. Normally, companies go private when the company's established, it's got decent cash flow, you can count on making your money back over the long term if you invest in it. So let's say it's a company that's got decent income, but it's trading like a 9 or a 10 PE. And that's not very good in today's market. It's decent, but it's not good. If you take it private, you can actually, over 10 years, get all the value of your company back if it actually continues to be profitable at that pace. And then after that, it's all gravy. So that's a great go private transaction. But Tesla doesn't make any money. But what do I know? Somebody wants to invest, he says. Now, if he's making this up, then he's just boosting the stock price from where it is. And you get in a lot of trouble for that. But he says investor support is confirmed. Only reason why this isn't certain is that it's contingent on a shareholder vote. So let's see if he files the papers. For a shareholder vote, he's going to have to file all the disclosures, who the buyer is, what the price is. So, I don't know. That seems like a very long putt for somebody to want to own. The reason you want to own these unicorn stocks is so you can get other people to buy the shares at a higher price, convince them that somehow this is worth something, not because you want to pay above what the market is bidded up to. So maybe I'm missing something, but I'd like to see the rationale why someone or some group of investors would want to buy a company that doesn't make any money, is reliant on government subsidies. I just don't get it. All right, let's go into the topic of the day. Let me get rid of this here. Let me handle the quick comments now before we move on. Hello, Wild Bill. Hello, Tom. Where's Barry? Hello. Yep, you see, good use for that mug. I'm sorry, I got that one today. That's from Bye Bye Bull. He says, your channel is a breath of fresh air. We're looking at the graphic on the video here. It says silver-backed mug, game changer, silver set to skyrocket. And as you see, you can put silver in a mug. And that is another great reason to have a Smaulgld mug. Thank you very much there. Bye Bye Bull. Wild Bill. The number of no mugs is going down now, and I think we've seen peak mug already. That could be. We're running out of mugs. And it's not a hoax of big mug. Shark Air, SpaceX is next door to me. They seem to be making money hand over fist. Now, why do you say that? They've had a couple of those rockets. Sometimes they blow up on the landing pad, and I think SpaceX, one of the things they want to do is meteor mining. Now they're going to need subsidies to that, but I don't know. We don't know what SpaceX makes because that's a private company. But and if they are making money, that has nothing to do with Tesla. So why someone would want to buy Tesla and pick up Solar City with it doesn't make much sense to me. All right. Solar City calls us with work every week. Well, just because, well, they may have a lot of cash because they raised a lot of capital. That doesn't mean they're making money. A lot of these companies, a lot of the Silicon Valley companies exist for years and don't make any money. And it's really, I think it's a scam that companies have these massive cash hoards that they can live off of while making no money. ASMR people, hello all. All right, DW's here also. And ASMR people says, new technology might allow us to break past peak mug. That's true. But right now, these are mini muggages. There's my mug right there. And by the way, if you want a mug, before we get into the main story, we're going to do real estate tonight. So have all your real estate questions. I used to do real estate. So that's, if you didn't know that, now let's put that up there. And that's if you want to buy a mug. I will make a trip tomorrow to the post office to send out mugs. We've got some orders to ship out. And if you want to order other Smaulgld products, we've got a whole bunch of them there. Not just the erasers, but there's also the Smaulgld to go, the travel mug. And I think they're having a special on a lot of the items. They're 15-20% off. There's also a Smaulgld cappuccino or smaller espresso mug, t-shirts, hats, pens, post-its, notebooks, things, a mouse pad, mice pads, mouses, pads, all things that are useful. They're decent prices, and it does help out the site. There's no YouTube, Google AdSense, or any other ads other than just pure Smaulgld stuff. And by the way, I joined, what did I join? Mind.com today. You know, all this Facebook, YouTube, Apple ditching Alex Jones off their platforms is a bit concerning. You can always say, oh, I don't do conspiracy theories. Doesn't matter. It's just the fact that they can throw someone off. None of them gave real indications as to what they did. It was the same with SGT report. So at Minds, yeah, that's what it's called, minds.com. And as you know, I am also posting over on BitChute, and I'm on Twitter, and I have a Facebook, and I have what's the other one? Google Plus. So it's good to have subscribe to all those, but the best place to subscribe is really smaulgld.com. Eventually, what I'm probably going to do is put up a my own SoundCloud account and just broadcast from there, and I don't have to deal with all this worrying about who's going to be where. And there's the BitChute if you want to go over there and just sign up. Okay, we've got some concerns about mugs here. ASMR people said espresso, I guess that would be a fractional mug. No, that's more like copper. If you count, maybe the travel mug is the gold standard, and the classic and super classic are silver, and then the smaller mug is copper. They're not fractional because they're still a whole mug. It's just like a penny isn't fractional. Well, it is fractional, but there's nothing wrong with a penny. Definitely a dime and a quarter is better than a $half. But as long as they're pure, these are pure mugs. They're still whole mugs. So even if it's smaller, it's still worth and it's a reduced price. The smaller mug is cheaper. And then the super classic mug is more expensive than the classic mug because it's got more design details. But these are mini muggages. And where's Barry? Concern already. Better never debase your mugs. All right. Point taken. I am the issuer, and you have to trust the issuer in these cases. But mugs are rare. All right, let's get into real estate. Real estate. I just put up the BitChute account there for you. All right. This ties into, this real estate discussion is going to tie into what central banks have been doing the past 10 years. Now, there's three types of bubbles that you can create currently. You can create a stock market bubble. Central banks can do this. You can create a real estate bubble, or you can create a crypto bubble. And the real estate bubble, I like to think of as the worst bubble to create, but it's the easiest one to create for 20-30% gains. It's the easiest one to create for the widest spread wealth effect. Because in the United States, I think the home ownership rate is 60-something%. It's pretty broad. So if you want to put money in the most amount of people's hands, real estate's the way to do it. But you can never really drive real estate prices up 200, 300, 400% because it gets to a point where you can't afford them. And you can't count on foreign buyers or cash buyers to buy houses in just ordinary neighborhoods with $200,000, $300,000 houses and expect them to be worth $3 million. It's just not going to happen. Now, you can take stock prices up pretty high. Look at Tesla. You don't have to have profits. You just have to have a guy willing to go on Twitter and be portrayed as boy genius, and you can get a $65 billion market cap out of it. We have plenty of examples of that. But even there's a limit to how high you can drive a stock. But you got Apple all the way up at $1 trillion market cap. All right. The reason I think cryptos are destined to be embraced by the establishment is stuff like Bitcoin. There's no way of valuing it at all, which means 200% increase, not a problem. 500% increase, not a problem. There's no way you can say Bitcoin. You can argue Bitcoin is worth $0. You can argue it's worth $1. You can argue it's worth $100. You can argue it's worth 1,000. You can argue it's worth 10,000. You can argue it's worth 100,000. You can make any convoluted argument why Bitcoin could be worth anything. Well, if the bankers have some kind of control over that, they can make it worth anything. And that is the best flexibility you can have in a bubble. Because when a housing bubble bursts, there's a human cost. People get kicked out of their houses. The banks have to figure out what they're going to do with the loan. We have a Smaulgld subscriber actually goes around and tries to rehabilitate the houses for the banks, gets paid as a subcontractor. You know, that's a problem. You ruin neighborhoods, and again, you don't get the same type of return, but it is broad-based. You have 60% of the country in... Yes, soap bubbles are bad, Wild Bill, but you can get that colloidal silver on the Smaulgld site. That soap is very good. So a housing bubble is not where you want to go again, and a stock market bubble, when there's a collapse, people lose their 401k. But I think this crypto bubble, there's going to be another one. Just my thoughts. Now, let's get into real estate. What's the problem with real estate? Well, what Bernanke and Yellen said when we hit the financial crisis was we had to do something to boost stocks and real estate. Clearly said that. They said they wanted to create a real estate and Greenspan, same thing. They want to create a housing bubble. They want to boost prices. And the idea there is through monetary policy, which is what the Fed conducts by printing money and bringing interest rates down, they could drive the prices of real estate higher, and then people would feel rich. And then by driving the interest rates down, not only could people afford to buy houses and therefore drive the price up, people would also buy stocks instead of other assets. They'd have risk on because you wouldn't be getting interest from bonds. And then the stock prices would rise. And in that sense, they thought that's how they can engineer a recovery. That was the big concept after 2008, 2009. That was the thinking behind QE. And the issues with those types of programs are monetary policy like that generally favors those who already have assets, those who already have wealth, or those that are willing to take a risk in the stock market and the housing market, not necessarily people who want to save. And Bernanke was questioned on this, Yellen was questioned on this, and their reaction was, look, just about everyone has a house, and well, even the people that want to save, a lot of them have houses. So they're very firm on the fact that they wanted loose monetary policy to drive housing prices and to drive the stock market higher. Now, just off on the side, as this third bubble, I think, this crypto bubble, they don't have to do anything, really. There's nothing that the Fed or the monetary policy has to do. They just need to have favorable regulation. And then they could do whatever the heck they want with these cryptocurrencies. They can put them into ETFs. They can move them in and out of wallets. They can do derivatives off of them. They can do IPOs. They can request that you send Bitcoin here, Ethereum there. I think that's what's going to happen. I don't see any reason why, if they have regulatory oversight over enough of the Bitcoin market, 40, 50, 60, 70, 80%, whatever it is, the rest of it will be, there will still be people, just like with cash, just like with anything, that will trade outside the system, will trade peer-to-peer, will use it for illicit activities. They'll just have a separate group of massive government chasing those people around. But the rest of them will just be regulated inside their own casino. I clearly see that's what's happening. All right. Unlike other bubbles, I'm not sure a crypto bubble would take other things down with it, ASMR people says. That's true. Not now. Not at these prices. But the other reason I mentioned last night why they want to create this crypto bubble is, at a minimum, there's $120 million worth of value in Bitcoin just sitting around. The merchants want some of that. Make it easier for the people to get that money out of there and start spending it. Then what do you get? You get the inflation that these people want. So the cryptocurrencies, by rising this fast, while they may be themselves deflationary, the spending from them could create significant inflation if, especially, they get bigger than they are. All right. But with real estate, what's the problem then with the Fed saying, look, we want to help you guys out. We want to make the stock price go higher, and we want the real estate price to go higher. So stop being stubborn and let us do our job. And since we told you this is what we wanted, why don't you just go ahead? Don't buy gold, don't buy silver, don't buy anything other than FANGs and unicorn stocks. And, if you invested in Tesla or Amazon or any of these stocks, Netflix, you made a lot of money, even though the companies weren't necessarily, according to the old Warren Buffett rules or value investing, you would never invest in those things, but they've gone up multiples and multiples, and silver's flat and gold has held its own, but which it should do. That's not supposed to make you rich, and real estate's gone higher. So what's the problem then? Why wouldn't you just validate and say, look, thank you, Fed, let's have another. Let's just keep doing more QE. Well, the answer to the people who have common sense is, well, because you can't. Well, they can because they've done it for 10 years, but you then say, well, it's unsustainable, and that's true. But so is your life. But I'm not here to defend the Fed. I want to go through what the problems are that they create. Not everyone wants to predict a collapse and like the worst possible thing. We're now, since 2008, everybody is wants to be the one who predicts the collapse. And we may all outlive a collapse. We may have a lot of financial difficulty. We may never have a collapse. Everyone says, mathematically, you don't know anything. No one knows. Game over, game changer. However, there are a lot of problems with boosting higher real estate prices. It's not just hooray, hooray for Captain Smaulgld, the price is going higher. I think it's fine. It's not, because first of all, it is artificial. And the problem with rising home prices, we know, is they're artificial. If your wages don't go higher, but they tell you you can buy a house that you couldn't buy before because interest rates have come down and you need less money down to buy it, you're not really in a better position. You're in a better position to get a loan to buy a house that you couldn't afford because your job doesn't allow you to buy that house. So it's very, very artificial. They haven't improved your lot in life. If you are working at a job making X and the economy sucks, but what they do is they create a situation where it still sucks, but you can now buy a house. Well, you say, well, it doesn't suck anymore. Well, it still does because you have the same crappy job and you're making the same wages. But you can buy a house, so I guess you're doing fine. Well, you're not, because now you have debt. And you have more debt than if you were making more money and had a better job and were able to put more money down on the house and owe less money. But that's not how they look at it. They figure we're going to get you into a house and we can't get you a better job. We can't improve the economy, but we can improve the economy to the point where you feel like you're doing better because you're in a house. So it's totally artificial. And also the problem is if you get people into houses, as we saw in the early 2000s, you get them in under that premise that they can afford the payments because the rates are low. Well, what happens when the rates rise? Well, then they can't afford it, and that's what caused the housing bubble. So it clearly it's a scam because it's masking over the fact that the wages and the underlying economy hasn't improved. And yes, there's some pockets of economic activity in the housing market, but not really, because the bulk of the homes that were sold in this recent housing boomlet and the housing bubble of the mid-2000s is old houses. So it's mostly real estate agents making money on the transaction back and forth. It's basically people moving out of used houses. Yeah, there's some new furniture and Home Depot stuff, but it's not new construction for the most part. It's not really that much in the way of creating jobs. So it's just moving the price of the homes higher. They're the same houses. They haven't, and the houses haven't improved either. So your job hasn't improved. The house that you buy isn't improving. And you probably, after you buy the house, don't have any money to make improvements. So the house is, the overall gain to the economy isn't much, but it looks nice. It's the same with stocks. If you can boost the price of stocks, they don't have to make earnings. So if you could take a stock that's trading at 15 times earnings and it's growing at 3% a year in profits or revenue, whatever you're measuring it by, but you pour more money into the stock market through QE and stimulus, and then the stock price rises, the company's not doing any better, but it now has a 20 PE, so the company's worth more. Again, you haven't done anything other than revalue the price of the stock, just like you're revaluing the price of the homes. And that's supposed to be, in the genius way of the Fed, that's creating a wealth effect. It's not. You're just revaluing prices higher without any real underlying change in the economic activity or even the value of the company itself. So the same thing is when a company buys back its shares, what it's saying is we're not going to use the money that we have in cash to invest in making the company better. We're not going to hire more employees because there's no demand out there really. So we don't need to hire more employees. We also don't need to develop new products because the stock price is going up anyway. And we're going to make it go up even higher by putting more money into it. So you can see how this does not boost the overall economy. You're just boosting the price of stocks. And by parallel, you're boosting the price of homes. The other problem when you raise the price of homes, unlike when you raise the price of stocks, anyone can buy a stock. Doesn't matter. Like you can buy Apple today. It doesn't matter what you can buy Tesla at 400. You can buy it at 800. You just buy less of it. Same with Bitcoin. And Bitcoin was 20,000. It wasn't too expensive. You could have bought 0.0101, whatever this $100 worth would buy you. But homes, you can't do that. Homes, the more money they make them, you can't buy them. The more money they make them worth, you can't buy them. So higher home prices, just like raising the minimum wage, shuts out raising the minimum wage shuts out the first-time job searcher. Well, raising the housing prices shuts out your first-time home buyer. So then who buys them? People with money already. And again, this is a rich get richer thing. All this talk of we have to solve wealth inequality in this country, all that kind of talk. They're creating wealth inequality. They're rigging the game for people who already have money, already have access to capital. And then the poor person at the bottom can't get into the housing market because they made the prices go higher, supposedly for the benefit of everyone else. It doesn't benefit anyone else. The first-time home buyer is hosed. So if the wages are going up 1-2% a year, which they are, and housing prices are going up 10-15% a year, how do you expect people to buy houses? Now, if you're sitting on a house, that may be good for you. But it's not all roses for the people who even own the houses. Here's why. If I own a house and I pay $300,000 for it, and I pay $5,000 a year in tax, and through no effort of my own, I'm just sitting around on my old couch, the value of the house goes to $400,000. What does the town do? They say, oh, you don't owe $5,000 this year. You owed $5,000 last year for tax. This year you owe $6,500. And you say, why? I say, well, your house is worth $400,000 now. What did I do to make it worth $400,000? Nothing. So the town looks at you and they say, oh, well, your house has gone up. So you must be rich. And we're going to tax your property as if you're rich. Now, so the housing price moves up for sure. But so does your obligation to pay the taxes on the house. So if your wages aren't going up and your house price is going up, well, then your house rich, but you're still wage poor. And those are your wages are what's going to have to pay your property taxes. So let's say you have another good year next year. You bought the house at 300, it went to 400. You get a 2% wage increase the next year. Wow, you really lucked out. You bought a house in the best area. It's worth $500,000 now. Then your local tax people say, you're not. We charge you $5,000 the first year, $6,500 the second year. You owe $7,500 next year. And you say, why? Well, your house is worth $500,000. You're thinking, why is my house worth $500,000? I paid $299 for it. So as the prices move higher, you get to a point where you say, wait a minute. I can't afford to live here. I say, why? You just made $200,000 on your house. So yeah, but I have to pay $7,500 a year just to live in it, plus whatever other things you have to do to maintain the house. Now you can see how this creates wealth disparity, because now the house, which should be a $299 house, which should be within the reach of most people, is not now, because it's $500,000. In fact, the person who bought it at $299, probably couldn't buy it today at 500, but now they have it, but they also have that tax liability that they have to pay. Now, if you think about it, 75, let's say it goes to 8,000, over 10 years, you're going to pay $80,000. Over 20 years, you're going to pay $160,000 in tax, assuming the price of the tax never goes higher. It's possible you can end up paying in the lifetime of the house more in taxes than the house was worth when you bought it. So rising home prices, not only do they raise affordability for people trying to get in, they harm people who aren't rich already. They're getting rich from owning the house, but if they're not getting rich on their wages, it's actually costing them, because unless you're going to sell the house, it doesn't matter that your house is worth $200,000 more than when you paid it. All you know is you have to pay $2,500 more a year to live in it. So you've gotten a rent increase, and presumably you've got $200,000 extra in equity when you finally paid off. But it really is a wash. Why? Because when you go to sell the house for $500,000, unless you're willing to move to a jurisdiction that's way outside your area, it's going to cost you the same price to move into another house, even a smaller house. So let's say you buy at 300, it goes to 500, and you want to cash in and get your 200. Where are you going to go? If you want to go to the same style house, it's going to cost you 500 because everything else went up. You can get another smaller house for 300, and that's one way you can pocket the $200,000. Or you can move to a jurisdiction that's really cheap. But for the most part, if you still have your job, all you can do is downsize. So if you're getting rich and you're downsizing, that doesn't normally comply with getting rich. Normally when you get rich, you get a bigger house. You don't get a smaller house. So, but think of it this way, though. The person who buys the house at 300 and it goes to 500, they didn't do jack to get that money, though. All they had to do is sit on their couch. So merely by occupying a house, they made money. What about the renter that lives next door? Their rent goes up, and your house went up $200,000. All they did was spend money on rent. So this really doesn't help anybody, because it raises the price of rents, and it raises the price of your home and your value, but you've got to pay more in property tax. So you're getting this big wealth disparity because the renters have to pay more. The only people who really make money on the housing prices rising are people who are flipping houses, people who have more than one house, and people who already have wages to pay the higher taxes. Now, the other problem is, as I mentioned, you can't move. If the prices are moving, you're kind of stuck in your area, and there's a point where when the housing price rises, you don't want to sell. But there's a flip side of that. When the housing prices eventually come down, you may have bought at 300, it went to 400, but then it goes down to 250. Now you're negative. So you can't move to go get a better job. You may take some comfort that, you see, the other thing is your property taxes probably won't go down even if the house goes to 250. Why? Because the local government has already counted on getting that kind of money. So they've already counted on milking you for $7,500 a year. They might give you some break, but they've already spent the money. There's teacher salaries, there's town bills to pay. They added more police. Maybe they bought one of those tanks for the police department. They bought a lot of equipment. They put in a new library, a swimming pool, all on the basis that housing prices are going up. So they miscalculated, and now the prices are going down. They still got to charge. And I heard places like Chicago, California, what they're trying to do is to keep the people there, is they got pension funds, massive pension, not just funds, but fund deficits in these things, and they need to get the money from somewhere. And where are they going to get it? Well, they're going to get it from the homeowners. They're going to try to take it out in property taxes. Now, the other thing that can happen is, let's say I buy a stock at 100, it goes to 200, and then it goes to 50. Then it goes to 10. Well, I'm screwed. I lost 90% of my money. Let's say I bought silver at 50, it goes to 15. I'm screwed. You know, I lost 60, 70% of my money. You buy a house and at 300 and it goes to 200, You could be homeless. I mean, why would you why would you continue to pay to live in a house that's worth less? So people walk away, but there's a flip side to that. So that's on the downside. But we're talking about what the dark side of rising home prices is. So let's say I buy the house at 300, it goes to 400, it goes to 500. My wages don't go up that much. I still have to pay the $7,500 in tax. But let's say the neighborhood gets a Starbucks or a Whole Foods, and now my house is worth $1.2 million. All the social justice warriors move in, and it becomes a trendy area, and it gets government subsidies. They set up they set up a lot of government jobs, and the FBI opens up next door, and the CIA, and the government contracting starts rolling in. And now where I live is the place everyone wants to live. It's like living on whatever that place, K Street or wherever it is in Washington, D.C. The house is worth $1.2 million. I'm not making that much money. I bought the house for $300,000. So did the people around me. So I die. So now I have a gain on the house of $900,000. And let's say the state I live in has an inheritance tax. I think they got rid of this in the Fed. And it's a certain percentage. And my kids don't have the 10%, $90,000 lying around to pay the inheritance tax so they can continue living in the house. Because there's a $900,000 gain on, and they want to pay, there's a 10% tax in my state. Well, guess who gets the house? Someone else comes along, one of the new guys working at the government contracting or the lobbying group, and they buy my house. And my kids have to leave, and they pay cash for the house. Price goes higher, the rich get richer, and I never received the benefit of the $1 million gain, nor did my kids. I just had to pay tax all along my life, and then when I die, my kids can't afford the house because they got to pay the tax. But someone from K Street moves in and buys the house, and now they don't care. They now have a $1.2 million house. So basically, I got to live my life in a $300,000 house. My kids didn't get the benefit of the house. And so the rising home prices didn't help me one bit at all. Thank you, Bernanke, and thank you, Janet Yellen. I don't think they think this kind of thing through. Now, the real estate agents love this. Higher the home price, higher the commission. But the problem with that is fewer and fewer homes get sold when the prices go higher. So again, it creates wealth disparity even amongst real estate agents. When there's a lot of houses being sold, there's plenty of work for real estate agents at all price points. But when the prices are really high, you get your super real estate agents. Now, you could argue, there's some people argue that you don't need real estate agents at all. That's a separate issue. All right, let me know what you think. I'm going to check out some of the comments. I haven't been looking at the comments as they've come through. But so rising home prices are not necessarily what you should strive for. I was always thinking that what you should strive for in a real estate market is home affordability, mobility, affordability. People can go into a neighborhood, they can buy based on their wages, they can put down a decent deposit, they can sell. The prices don't move up too high. Just like gold, you don't want it to skyrocket. And the other advantage, you know, with gold and silver is you don't have to pay tax on it every year. And if the price goes up, don't put it past them. If it ever did get higher, they always talk about there being like a surtax or a luxury tax. Let's say gold goes to $10,000. Or let's say in the game changer, game over scenario, they reprice gold at $10,000. They say, but all holders have to pay a 25% surtax on your gain, so you really wouldn't get the benefit of it. Anyway, but the point is today you can hold gold or silver for a period of time, and you don't have to pay tax on it each year. You have to pay your storage fee, but it's not the same as paying a property tax. All right, let's take a look at our comments. DW, real estate here in North Phoenix are moving fast, at least in my area, but I keep hearing about a housing crash coming soon, a home selling in their area. I don't really I don't really follow the market much anymore, and I drive around. I don't see I notice that the home signs, but I don't see a lot of them. Soap bubbles are the worst. ASMR people, unlike many other bubbles, I'm not sure a crypto bubble would take other things down with it. We talked about that unless it was a really, the valuation was so huge. I think what they want to do, this is not a prediction, but I think this will happen. They want to get the prices of these things really high so they're not volatile anymore. Now, I'm not predicting a $100,000 Bitcoin, but that's what it would be. If it was at $100,000, it wouldn't move very much. And it would be all locked inside of ETFs and so on. We may be a long way away from that. It's a possibility. The other possibility is it goes to zero, and they figured this is a waste of time. If you guys want to play around with it, have at it. It doesn't have any value. I don't really see a middle ground for it. I think it either goes up exponentially and it gets regulated and gets co-opted and people play with it on the side, or people just lose interest in it and then the government just issues their own cryptocurrencies, as maybe ill-advised it may be. Who knows? But I just don't see them either shutting it down or it replacing central banks. I think they're somewhere in the middle. And if it is somewhere in the middle and it is regulated, it has to be worth. But one of the reasons they shut down the ETF, the SEC shut it down, was they said the market was too small and they're not regulated. Well, that means the price isn't high enough. They need the price to be bigger and it'd be less volatile if it was. DW, doesn't home ownership keep up with inflation? Yes, but you have to pay the taxes. And the taxes generally rise at a rate faster than inflation and at a rate faster than your wages. So the home is rising faster than your wages. Your wages generally don't keep up with inflation. And the taxes rise faster than your wages. So it's not, unless you already have some cash lying around to pay the taxes, it's almost a mixed blessing and you get the housing price to go higher. When a company buys back stock, it says they're out of ideas. Yes, it's either they're out of ideas, they don't want to invest in innovation, or they don't want to invest at the moment, not just because they want the stock price to rise, they don't want to invest at the moment because the market isn't growing, because the economy isn't growing. So they may have some great ideas, but they know that even if they came to fruition, the market isn't there because the people don't have the money to buy the product that they're selling. So what do? They do share buyback. Zilla, home equity borrowing from higher home prices results in more spending. Yes, but that's artificial too, because remember the increase in the home price is artificial. It's only been boosted higher. So it's all orchestrated to get you to spend. ASMR people, yes, if you don't plan on selling, you don't want price going up. That's right. Although everyone plans on selling, but in the example I gave, where the homeowner lived his whole life there, never sold it, his kids don't even get the benefit of it. They can't afford the taxes on the inheritance tax. Whereas Barry, doesn't seem to me that you own that house if you got to pay rent every year to keep it. Well, that's definitely true. In fact, if you don't pay the rent, they put a lien on your house. You don't pay for a few years, they'll foreclose on your house. ASMR people, a third of my mortgage payment is property tax. That's right. For most people, that is about right. DW, years ago in California, that's right, the people passed a Proposition 13 law to freeze the taxes on the house until you sell it. It kept grandma from being forced out of her home. The state hated it. Yeah, they did. That's back when, in 1978, I believe, when California was not a blue state. I mean, Ronald Reagan had been governor in the 60s in California. Proposition 13 was probably the last conservative measure that passed. And the other problem with Proposition 13, though, is the housing prices in California are so high that even though you don't raise the taxes, the people that moved in the last 20 years, they're already at high tax rates anyway on the property taxes. ASMR people, when my house value went down in 08, it took 5 years for my taxable value to go down. That's the point. You don't get it. They get you on the way up, but when it goes down, they don't. They've already counted on spending your money. So just because now your house price went down, they don't care. They've already assessed you at a higher price. Daniel Gummer, ABX breaking down chart looks ugly. No. Zilla, you deposit on a home when you buy is the commission you pay when you sell. I hate realtors. Zilla, does any state or municipality offer a Lloydal tax option? I think, isn't that where you somehow opt out or something and you say, look, I know that churches do that. I think that's what that word means. The churches say, look, we're our own entity, and somehow they don't pay tax. I don't know how that works, but I remember seeing 10 years ago, someone tried to explain it online, and it almost sounded like Peter Schiff's dad, where he's telling you, you don't have to pay income tax. You don't, there's something in this rule or regulation. So I think it was his dad or somebody used to put down that their income was zero by their definition of zero. I'm pretty sure it's Peter Schiff's dad. He had an argument that it wasn't income. It was something else, or that the income tax itself was unconstitutional. I don't remember what it was, but I think it's the same with trying to get out of paying your local taxes. It's almost impossible to get a government-appointed, government-paid judge to agree that you don't owe taxes. So I think when you buy a house, you are saddled with taxes. Now, there are jurisdictions that have lower taxes than other taxes, but it's 6 of one, half dozen the other. They're either going to have low property taxes, and then they're going to have all types of surtaxes, excise taxes, sales taxes, taxes for licenses for everything, your car, or they're going to have high property taxes. So you can't win either way. You're going to pay the tax. And renting doesn't help you because the landlord puts that tax, just adds that to your fee or your rent. All right. Well, thank you very much for listening tonight. And I will leave you with a pitch for you-know-what. Mugs. So if you want to buy a mug, I will make the trip to the post office tomorrow. I do send them out insured. You get them in a couple of days with tracking, and you need a mug. You have to have one. You might as well have a Smaulgld mug. So here goes. 18 reasons we're up to. Ten reasons why you should buy a Smaulgld mug. Reasons to buy and hoard mugs. Number 1. Mugs have been used for drinking for more than 5,000 years. Number 2. They are finding more uses for mugs every day. Number 3. We could not live our lives without mugs. Number 4. The Russians and Chinese are buying mugs hand over fist. Number 5. Mugs are made in China. Number 6. Mugs are hard assets. Number 7. Mugs are real wealth. Number 8. Mugs cannot go to zero. Number 9. Mugs are portable. Number 10. Mugs are drinking vessels, period. Wait, there is more. You can mix Mountain House in a mug. You can carry your barter silver in a mug. You can do many things with mugs that you cannot do with fiat currencies. Measure your wealth in mugs. They have mugs at the offices of JP Morgan and central banks. That is all you need to know. When the excrement hits the fan, you'll want to have your Smaulgld mug close by. Buy your Smaulgld mugs today. Reasons to buy and hoard mugs. Number 11. You can stack mugs. As you can see here, mugs are stackable. Add to your mug stack today. Buy a Smaulgld mug. Reasons to buy and hoard mugs. Number 12. You can put coffee in a mug. As you can see here, someone very clever has done so. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 13. You can put cognac in a mug. As you can see here, someone is thinking of putting cognac in a mug. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 14. You can display a mug on a studio soundboard. As you can see here, someone has displayed a mug on a studio soundboard. This highlights how versatile mugs can be. Mugs can be put in countless places, and we intend to show you as many of those places as possible. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 15. Mugs do not require electricity. As Smaulgld subscriber Wild Bill points out, mugs will still be usable after an EMP. Mugs do not require electricity. Here is a picture of a Smaulgld mug and another Smaulgld mug. They will look the same before and after an EMP and never require electricity. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 16. Mugs are undervalued. The price of mugs is about the same price as it was 10 years ago. This means that mugs are one of the most undervalued assets on the planet. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 17. You can hold your keys in a mug. Keys are very important. You can hold your keys in a mug. As you can see here, someone has put their keys in a mug. Buy a Smaulgld mug. Reasons to buy and hold mugs. Number 18. You can defend yourself with a mug. Mugs make great defensive weapons. In many states, you can open carry mugs. In all states, you can conceal carry mugs. Protect yourself with a mug. Buy a Smaulgld mug today.